for insight. Let's go to our featured guest of the morning. He's Allan Small, Senior Investment Advisor at Allan Small Financial Group, IA Private Wealth. Thanks for coming in, Allan.
Thanks for having me.
What's your take of what we've seen so far in Canadian earnings, and what are your expectations this quarter?
Well, it's interesting, with all the names we're seeing on the board there, a lot of them are going to tell us the health of the consumer. Obviously, RioCan, Boardwalk REIT, telling us, how much are higher interest rates going to be affecting these REITs. Obviously, from a REIT perspective, a lot of individual investors, they've been kind of a no touch for the last little while. Mm-hmm. How are these companies faring? What's their occupancy rates, et cetera? But overall, I think this week is going to go a long way to tell us health of the consumer, health of the Canadian economy. How are things getting better, or are they still sort of flatlining? And that's kind of been where we've been at for quite some time. Canadian economy flatlining, U.S. economy doing a little bit better. Mm-hmm. We're seeing that reflective, obviously, in our dollar for the last little while. So I think a lot of these names will give us a good insight into the consumer.
What's your take on the Canadian REITs right now? It's an interesting sector with expectations of interest rates to move down, but every REIT is different, or certainly there are REITs can be clustered by sector. Today we've got one in the residential real estate market to report. That's Boardwalk REIT, as we look at the REIT index on the TSX, and one in the retailing sector, a very different sector, RioCan. What's your take on the REITs? Yeah,
so again, the REITs, just because they've been, they're obviously heavily affected by interest rates, right? And unfortunately, even though they are in different areas of the market, we tend to look at REITs, kind of clump them all together and say, high interest rates, they're going to struggle.
Right.
So it's no wonder that you saw a chart there. A lot of these names are down. Yields are higher, obviously. So I think for those investors right now, at least for the last little while, they've been buying these REITs more from an income perspective, an income play versus anything on the growth side. But a lot of these names are definitely depressed, right? We've seen a lot of these names trading near their lows. Perhaps if we do start to see some interest rate decreases coming, maybe as early as June or July, maybe investors take a look again at these names and start getting excited about them again, because again, you can get a very good yield. A lot of these yields, I think, are okay. I don't think there's any danger on cutting the distributions that they're paying. At the same time, business, we'll see how it goes. So overall, I think if as an investor, more income versus growth, although you will see some pickup in some of those names on the stock side because they're just so depressed right now.
Canadian consumer discretionaries. Pet Valu has reported a very mixed set of results. One thing that really jumps out is very lackluster same-store sales. Sleep Country Canada will report later today. And one company that gets a lot of attention, one stock that gets a lot of attention in this sector is Canadian Tire, which is languishing near 52-week lows. What's your take on the Canadian consumer discretionaries?
Yeah, interesting. So I would look more to a Canadian Tire to give us some indication again as to how the consumers faring, because of the type of business that Canadian Tire is in, right, which is pretty much everything. Pet Valu, a little bit surprised. No matter what seems to happen in the economy, people tend to spend on their pets, and so what does that tell us? Obviously, there's been some cut down in some of the spend there. Obviously, they have higher costs, which is eating away at profitability, which is happening right across the board in many different retailers. So, yeah, it just keeps telling us that things are still not getting better as quickly as we would like. Economy is still relatively flat. Consumer is spending, but where they can cut, they seem to cut. I know Amazon has told us that people are still spending, but if they can find a bargain, if they can find a deal, they're going to go there. So people are still spending, but not as much. So overall spend is definitely down.
What about big oil? Suncor Energy will close out the earnings season for the huge Canadian oil producers later today.
I like Suncor, trading roughly 10 times earnings, a little bit higher than it was, but the stock price has moved up, now in the low 50s. I like their yield in and around 4%. I think it's a name that you could look to buy for dividend and growth going forward. I like CNQ, obviously, it's stock split coming up in the not so distant future. And then when you look south of the border, I still like a name like Chevron. So those tend to be my three favorites on the oil side. Both of them, or all three, pay a good dividend, as well as I think they all have potential for growth.
Okay.